Hi traders, Nathan Bray here from ACY Securities. Well, all the trading ducks have been in a row. I know last week I was pointing out we had some weakness in this US economy. So we had a contracting US economy, we had rising inflation, we've got recession fears, and now we've seen data coming out confirming all of that. So the data is lining up with the fundamental analysis now. We're seeing the Richmond Manufacturing Index going negative. We're seeing the services PMI dropping. We're seeing the manufacturing PMI dropping. Existing home sales, I mean, my head's about to explode with negative data coming out on the US in line with the longer term fundamentals. We've even got your 10-year yield above 3%. But the most exciting thing that I'm looking for is to get agreement or some kind of confluence between the fundamental news that's coming out, which is very negative, the data is very negative, and now we're getting these technical points that we can trade off. So I'm going to go have a look at the charts with you and show you where all these ducks are in a row looking for short positions on the US stock markets and even the ASX 200.
Well, last week, traders, we broadcast out on our live interactive trading feed on Telegram some key levels being reached in both the S&P 500, and that's a weekly chart, and also we were looking at the NASDAQ potentially approaching these levels as well. So let's have a look and see how all the technical stars aligned for us, or all the ducks in a row. So this is the chart here on a weekly of the S&P 500. So the rationale behind it was we had this whole move down, price had retraced up to the Fib 62% retracement level. It also coincided with the fact that it was a major level of weekly support. And of course, we're in a correction phase where it was putting in these lower tops and bottom. And you can see since then, we've seen a pretty smart correction here, a pretty solid sell-off on a weekly chart. If we move to the daily as well, the other thing I really like the look of, and this is about getting all the ducks in a row, all the stars aligning, you can see it price literally got up to the 62 Fib retracement level, as well as just touching the 200-day moving average. So when you get a situation where you're trading in line with a trend with a Fib retracement level, a 200-day moving average, and that's coinciding with negative data for the stock market and changing fundamentals, it does provide some trading opportunities from there. Now, if we move across and see how the NASDAQ went, so look at the NASDAQ, it literally got all the way back up. I was broadcasted out just short of, hoping it would get up to this 62% Fibonacci retracement level, in line with the trend and running into a couple of levels of weekly and daily support, potentially reacting as resistance. And then, as you can see, we've got a nice candlestick reversal pattern that's now moved all the way back down below a previous level of support. So seeing these types of levels all occurring at the same time is key. And when you have a 200-day moving average coinciding with the 62% Fibonacci retracement level in line with the trend and at a key level of resistance, it does allow you to match data, the fundamentals, and the technicals are all screaming that there is a probability we could see a reversal at that stage. Now, let's actually do a quick example. So let's have a look at the weekly chart on the ASX 200. So looking at the ASX 200, it did something very similar. So the previous high on the ASX 200 became a level of support as price was going higher. But as we've had a breakdown and putting in lower tops and bottoms, the ASX 200 as an indice got all the way back up to this previous high and running into previous support becoming resistant. So let's say I draw in a Fib here and I'm on a weekly chart. So I'm just going to draw a Fib from top to bottom on the most recent level. So it also coincides with the 79% retracement level. And let's say you do the entire move. So let's say you go a Fibonacci from the previous high point all the way down. It coincides with a correction or a retracement of the entire move down at 62%. So in this case, you've got a previous high, major level of support becoming resistance, a 62% and a 79% Fibonacci retracement level, as well as a reversal point. So these are the types of events that occurred last week that we can have a look at and say, moving forward, when we get our technicals, our fundamentals, and the data going in line with the direction we're looking to trade, these are the times you want to take advantage of trading opportunities when they present themselves. Happy trading, everybody. Have a great week.